traders, I'm Mike from GYLD and I welcome you to our second market review session where we are going over some of the major markets and we are trying to outline some potential targets for the upcoming week. So starting with the dollar index as usual, we can see that we managed to take out the previous high over here on Monday of the previous week. Following that, we got a nice rejection off of that level and we managed to close below this gap on the other side of it. So this is giving me some early signs of potential reversal or a pullback. However, it's very early to tell right now. So if we are to go lower, I would like to see price keep closing below this gap, potentially giving us a smaller impulse to the downside, giving us a new lower low, confirming this as our lower high. So potentially we could look at levels such as this and this as our targets. However, we need to see that confirmation of a downtrend on a lower time frame. So that's it for the dollar index. Moving on to the euro dollar, we can see that the same low, which is the high on dollar index, we have not hit. So there's a little bit of divergence over here, showing us that euro is probably not as weak and it is not letting the price to go lower. So haven't met that low yet, and currently we're kinda in a little bit of mess. There's no clear one-sided bias. So although we have that same gap and we closed above it, similar concepts apply. If we are to go higher, would like to see price keep closing above this gap, but it's very uncertain. You know, there's a lot of zones for shorts, there's zones for buys. So euro dollar, I would be a little bit more careful. Looking at the pound dollar, very similar to the euro dollar. Also, we have not met that low yet, so could be a future point of reference, future targets. However, as of right now, the same story. We're closing above this gap over here, this imbalance rather. So we could see some longs also, but once again, just like with the euro dollar, it is not clear. So I would rather stick to some markets that give a little cleaner picture. Which, for example, could be gold, which is our next asset. Gold generally performs extremely well during time of wars and crisis and uncertainty and stuff like that, as it is a safe haven asset. So gold, we discussed, would like to see more longs, which came eventually. There was no deep pullback though. Right at the beginning of the week, we started going higher and higher, making higher highs and higher lows. There were even some nice pullbacks into zones like these or this, right? So hopefully some of you called the longs over here, and gold looks to be much cleaner and it has a fundamental reason to keep going higher. So gold I would prefer over the euro dollar or the pound dollar as of right now. This could obviously change throughout the week, but we will see. Moving on to Bitcoin next. Looking at the daily time frame or even the weekly, we can see that not much has changed. We're still hovering around the all-time high. And I personally believe this is time where most people will get hurt, as one part of the market will try to catch the tops. So they will keep spamming those shorts, and the other side of the market will be greedy and feel FOMO. So they will be trying to chase the longs. And in the end, probably both sides would get hurt. Both those who are trying to catch the top with the shorts or those who are trying to chase the longs, expecting price to go to $100,000 or $200,000 for no real good reason. So Bitcoin, I would be a little bit more careful, stand on the sidelines. If it's to be bullish, continue being bullish. This is a zone I'm looking at, but as of right now, there is nothing going on and it is best to stand by and wait for more information on Bitcoin. All right, looking at the S&P 500, we can see that we had a nice pullback into these zones of support. So could be potential longs in the upcoming week. However, the price has been a little aggressive lately. We're at all-time highs and we're starting to consolidate a little bit more. We are creating some 4-hour zones for shorts. We have some zones for longs. At this point, it's kind of battling between two zones, and it is not the best market condition to be trading in. And if this is to be if this is to keep buying, I would ideally I would want to see prices go below this point, and then we could look to buy and take the price higher. And last but not least, we have the Nasdaq, the US 100. Very similar story, also at all-time highs, but here we can see that the momentum is slowing much more rapidly compared to the S&P. And we've spent some time now, we've spent the past 40 days, around 40 days in a consolidation at around all-time highs without making a new higher high. So this one I would be a little bit more careful. It seems to be rolling over, so I would not be surprised if we got some impulsive bearish movements, but as of right now, this is on a standby mode, and I wouldn't want to touch it as of right now. All right, so that's it for the markets, and let's take a look at the economic calendar. All right, looking at the economic calendar for the upcoming week, starting with Monday, we can see that there's no heavy hitting news. So being Monday is start of the week with no news, I would be a little bit more careful and keep my expectations low when it comes to the volatility. But there will be a lot of news throughout the week, so Monday is just a day to be a little bit more careful. You know, price action will show us its hand first, so it's best to just sit on the sidelines and wait. On Tuesday, we don't have any heavy hitting news either. However, all the action starts on Wednesday. We have New Zealand dollar interest rate decision. So for those of you trading Kiwi, this might be an interesting time to watch, or the day after, once the interest rate decision has done its damage, right? On Wednesday, we also have core CPI and CPI year on year and monthly on monthly for the US dollar, which will definitely bring a lot of volatility. So market will definitely be awaiting this news release, and therefore Wednesday is probably the earliest we can expect some major moves to come in the market, and hopefully they will provide us with some opportunities for the upcoming days. So on Thursday, we have a little bit of news. We have the European Central Bank interest rate decision. So once again, that's a heavy hitting news that the market will be waiting for regarding the euro dollar mostly. So I believe that if we do not have a clear picture on the euro dollar as of right now, Thursday could definitely change that a lot, and it could give us a clearer bias for the upcoming sessions, right? And we also have PPI and initial jobless claims for the US dollar, followed by the European Central Bank conference following up on the interest rate decision. So generally what I've noticed is that once the interest rate decision hits the market usually moves heavily into one direction, and then the press conference, that is half an hour, 30 minutes after the interest rate release, tends to often reverse the price action. However, this is something that doesn't stand true every time, and it's something that you should analyze and maybe backtest for yourself to see if it holds true for your trading, right? And on Friday, finally, we have some GDP for the Great Britain pound. That's gonna cause some movement in the market, absolutely. And we also have German CPI, so that's gonna move euro a little bit for sure. So this upcoming week seems to be pretty much starting on Wednesday. Therefore, Monday and Tuesday, keep your expectations a little smaller. And from Wednesday on, we should have a clearer idea of upcoming movement. So with that being said, guys, we wish you luck for the next week, and I will see you next weekend. Cheers.